What's going on, guys? Meathead Money here, coming at you with a special video today on a REIT. So I think that this is a good opportunity for anyone looking for some nice passive dividend income. I think this is setting itself apart for some of the more popular REITs out there that I think get a lot more credit than what they deserve. So let's dive right into this. So the REIT we're going to be talking about today is the Vici Properties Corporation. So they're actually a real estate company that invests in properties, particularly in the gaming industry and in golfing industries as well. So what I did was I actually went on the Vici website. I already downloaded the presentation, but if you guys want more information on this, this is essentially where I got this drop down. So diving into this, we can kind of see this company started out in 2016. And since 2016, they definitely had some hardships. They had to deal with COVID, around the 2019 into 2020, and then still really hitting some of the side effects 2021 yet. But throughout this entire duration, they've been able to continue increasing tenants, and they've also increased their overall revenues as well, and also increasing the dividend payouts throughout this time frame. So you can kind of see here, the other point that really jumped out at me was that even during the COVID era here, they were still able to collect 100% of their cash rents from their tenants during this time. And since the duration of their history as a company, they have not yet missed a payment from their tenants, which is huge. It's kind of an uncommon thing. We can kind of see though here, so they own 50 different properties through 15 states, including Canada. The big property that they just got in 2022 would be the Venetian, which would be Las Vegas. So they have a huge footprint in Vegas. Roughly 50% of their portfolio or their tenants that they own are on the Las Vegas Strip. So big companies, a lot of money. And again, they also have some other areas here too. So they've got 500 retail outlets. They've got 4 championship golf courses. And just keep breezing through here. So they are a 100% triple net lease company, in which the tenant is responsible for paying all the property taxes, maintenance, utilities. So really, the only thing that the company is responsible for is collecting the payments from the tenants, which allows them to put more money into other areas that they would see more or less expanding. So this is kind of the breakdown of what they have for their tenants right now. So you can see MGM and the Caesars make up a big chunk of this. They just got the Venetian, and then you can kind of see some of the other breakdowns here. So there's Jack Entertainment, Cherokee Nation, Pier Casino, kind of makes up their whole portfolio here. A couple other high points I wanted to hit on that make this kind of stand out to me is their lease terms. So their lease terms are pretty long here. We're talking 42 years. Again, with REITs especially, you want something that's going to be stable income, right? Because a lot of these companies are investing in the dividends, which they pay you either monthly, quarterly, annually, and you collect that money, and that's more or less kind of what makes these types of stocks attractive. But with having a longer lease term, their tenants are contracted to a longer term, which creates more of a stable influx on their part for getting money, which in turn they can pay out dividends to their shareholders, which would be us. Again, rent collection 2020, 100%. And cash flow volatility has been pretty low. So again, all good, positive things. We can see again, over the course of the years here, their dividend payouts have increased. I'll show you a spreadsheet here later that kind of gives more of an intrinsic value, which breaks that down a little bit better. And then this is just kind of a high level, again, map and kind of area where their tenants are distributed both in Canada and then in the States. So again, a huge footprint in Vegas, a lot in the Midwest, a little bit on the East Coast. And again, they're looking to expand yet. This is more of a drawdown kind of here on the Las Vegas Strip and kind of their footprint here. Again, they own quite a few of these properties. In 2020, they've seen $45 billion in visitor spending and their, $8.3 billion revenue for 2020. They currently own, 11 of the 20 largest hotels in the world. And, these numbers are pretty outstanding. Especially with having a footprint in Vegas. Vegas in and of itself has got a lot going on for it. They got the Golden Knights, they got the NHL teams there as well. And they've got the NFL now too with the Las Vegas Raiders. So that's bringing in more money and more potential, residents and tenants and customer base to really use some of their properties that they have here. So just jumping into a few articles that I've seen as well. So again, over the past 5 years, this REIT has also actually beaten out the SP 500, which again, we have to consider that this is a REIT. So a lot of REITs, you're really focusing on the dividend payouts, and you're not necessarily expecting the stock to increase on a, share basis. So if you buy a share, say at $30 at a REIT, you don't expect that necessarily to go up to $60, right? You plan on holding that long term, expecting the dividends to increase, and then you're, basically going to collect the dividends, and that's what you're banking on. The issue I have with REITs is that over time, if the share price does not fluctuate much, you're fighting inflation. So yes, your dividend payout might be more, but if you're not, if the stock isn't increasing with inflation, you're technically losing money. And I think a lot of people lose sight of that when they primarily invest in dividend stocks. But this has a high potential, with potential growth, as we've seen in the past and, future years to come. Now, again, you can't take past experience and expect that all the time. Keep in mind, this is a fairly new company to the market. So you would expect this to grow a little more rapid at the beginning and then kind of maybe slow off here as it's, matures. However, they do have a lot of potentials looking forward here. They're looking to invest in soccer teams, as well as potentially trying to get into football and particularly the NFL and getting into some of the training facilities and trying to branch out in that area too, which again, that's a huge market and they can start getting in there. Potential for that is also pretty good, especially with NFL teams. Again, we're talking long lease periods, with training facilities with the NFL. They would own those for long term. So as long as the NFL team is there, they would have potential to keep long-term leases with that as well. So right now, this pays at a 4.6% dividend yield at $1.56 per share. So that's 4.6% on any REIT is pretty good. And again, keep in fact that we're looking for the stock price as well to grow over time. So you're kind of double dipping in a sense with this. Again, so revenues, they've been up 111% year over year, and they've got a pretty solid balance sheet with equity to debt ratio of 0.7 and 3.5 times their interest coverage. Near future, they see debt maturities about $1 billion next year, with $2 billion in 2025. The one negative that we would see potentially is that with interest rates coming and them having to refinance, just again, got to keep the time period that we're in here with potential recession and rate cuts, and potential, increase in mortgage rates and interest rates in general. If they have to refinance, they might take a hit a little bit having to refinance at a higher rate. So they might take a little bit of a dip with revenue. However, I think the potential outweighs the risks in that aspect of it. So I want to look at just the overall stock itself, kind of how it's been trending. So, we can see they were pretty bullish cycle. They kind of hit that period again, COVID. Really, a lot of these industries kind of took a hit. They were able to rebound, and they've been on a nice slow incline here ever since. Right now they are trading at about $33.80. So $32.97 is kind of where they're at right now. Intrinsically, we can look later. It's maybe a little overvalued, but again, it's pretty fair. We look at future targets here, kind of what the market expects us to get at. They're looking right now at a price target of $37, which, that's about a 15% upside that we're looking at. And that's just the median target range of $37. This could potentially hit 43 as a projection right now. And again, depending on how they expand, will determine that. Dividend calculator wise, so this is a good website if you guys want to just get a little hindsight here, looking a little further ahead, not so short term. So if you were to invest, $1,000 in this, say 5 years ago, based on their annual dividend yield right now, the 4.73%, expected increase 4%, which is pretty fair. I can show you where I got that number from here in a little bit. And then, assuming 5 years invested, you'd be looking at almost 7 times your value with just having your money in here, sitting in it and reinvesting those dividends. So again, pretty good value here. Again, for passive income, seems pretty good. And then the other thing too, so on this portfolio visualizer website, I want to compare this to, so there's the SPY, which tracks the SP 500, O, which is your realty income. That's a really popular dividend income stock that a lot of people seek. And then this is the Vici here that we're looking at right now. So if we analyze this, what this does, it will actually compare it from, now again, this stock was 2016, so that's about as far back as we can go for comparison. And right now we threw 10,000 bucks in there, and it will kind of show us what our average would be in these 3 stocks. So we can see Realty Income Corporation, we would have gained $14,376. If we would have put our money in the S&P 500, $17,000 we would have made. And if we would have threw it in Vici Properties, we'd be looking at $22,000. So we would have beat the market almost $5,000. And the other thing to look at too is that it had the best year at 43% gain. And it also had the best worst year at only losing about, 1.23% of your investment. So both of those are key when looking at these things. The other thing I wanted to look at as well would be the intrinsic value of this company. So we use the dividend discount model. This is taking the dividend payouts. You can look this up historically, either on Yahoo Finance. I use Seeking Alpha. Plugging these values in, get an average growth rate of about 8%. That's what we've seen over the past 4 years. Now, again, it's a newer company. They did have that COVID, so they're still bouncing from the pandemic. So the growth rate's probably a little high for what we would want to see, a future. So if we knock that down even 4.5%, which right now their expected growth range is right around 5%. So I think that's a pretty fair growth rate to assume. And based on the current price, you can see we're at about 19% difference in what the intrinsic value would be, which is right now at $40.76. So I'm getting that at. Now I also do a multiple valuation model in which we take some other companies in the same market, take their stock price and their PAFFO, and we compare them to see where Vici would kind of sit in the group of those other companies. So if we do that, we take these 4 other companies, they have an average PAFFO of about 16. Vici is sitting around 16.4, so they're in the middle there. And with that, we get an intrinsic value of about $29.40. So, if we were to take the average of both of these intrinsic values, we'd be looking at, roughly $35.49 as a fair value price for this stock. So right now it is technically trading above that. So the current stock price based on this would be, a buy. It would be a fair value to buy it at. However, with most of my investments, if not all of them, I always do put some sort of safety margin on there just to give us some sort of buffer in the event that, again, these are all calculations. Nothing here is guaranteed. So it's give us a good basis for where we want to invest, to give us some qualitative data here. However, 20, 30% margin is what I like to throw at it. So, if we do a 20% margin off this intrinsic value of $35, we're looking at closer to $28 is where, I would be looking to invest. So for me, Vici's a little high. I would like to see it maybe closer to the $30 range, which I think is very feasible to see yet. So when we get some of these dips like $34, or excuse me, $30.34, that to me would be a buy. And when, if we get somewhere down this 28 range or, even lower, that might be more of a situation where you want to kind of load the boat a little bit. And again, it's going to really depend on your financial situation, what you guys are willing to spend. And again, do your own research. I think this is a pretty good value for what you get out of it. There's a huge potential for it, for growth. And as far as a stock that pays quarterly dividends, with a very good growth potential within its stock value, makes this a pretty high value stock in my portfolio. So I will be looking to actually include this in my portfolio. If I do see this get around the $28 ticker, maybe we can do another video where you can actually see me buy this live. We can go through like a sell put or a call option. If we look at this right now, I believe these are doing monthly options. Let's just take a look here. Yeah, so it's roughly every few months you can get options on this. So it might be a little far out if you guys are looking to invest now, but if we look for maybe June, right now you could do a sell put option for right around $30, get a $10 premium. Again, $30 isn't the worst. Like I said, I would like to get it right around the $28 mark would be kind of what I'd be looking to get it at. But guys, that's what I got for this video. Hope you guys learned something. If you liked it, give me a like, subscribe, leave a comment. If there's some other videos or topics you'd like to see. I do plan on discussing more dividend stocks, other stocks in general, and just option trading within the market. So feel free to leave a comment, subscribe, and hit that like button. Have a good day, guys.